Hey, it's Soleil, and this is episode 487 of the Orange Pill Investor. And today I want to talk about it's not quite an after action report. Probably have to do that in 2026, but maybe a little bit of self reflection about whether um, this strategy was wise and if there was any better way to do it. Um, I called it "Are You Stoned or Just Stupid?" because that was a T-shirt that I used to wear in second grade. I bought it from like one of those. Well, I don't know if they still have them, but they had little shops at the mall where you could go and get stuff pressed onto the T-shirt, like while you wait. And that's the one that I picked. Are you stoned or just stupid? Think I may have actually even had school pictures taken with that one on, or maybe they objected. I can't remember. Um, but my plan, the whole, ever since whatever, mid 2024, was going to be assuming 4 year cycle, we're in a bull market, it'll end at somewhere around the end of 2025, beginning of 2026, and that I would continue to sell covered calls and use the profits to buy more long positions. Initially, I was doing it mostly with shares, but I got all bulled up from Quant Bros 1 and the March pump and the November pump, and I didn't quite take enough profits here. However, in 2024, I did pay. So my actual tax bill was more than my highest W-2 wages, like single year wages of my entire life. So, um, this worked in 2024. However, in 2025, I will, it'll probably take me a couple of years to eat up the capital gains losses. As far as I know, you can stockpile uh, your stoned. There you go. Um, yeah, at least stoned is voluntary. If you're stupid, you're just stuck there forever. Um, but yeah, so I didn't take as much profits in November as I should have. I'm just like, okay, well, if it can go to 500, it can go to 1,000. But of course, it retraced. And then we kind of got the okey doke in July, almost got back to all time highs. And probably, yeah, I try not to make predictions about whether the price is going to continue to go up or go back down. But this would have been another chance to take profits that I failed to take in November, but I was FOMOing and didn't want to miss out on the gains to the next leg up to 1,000 or wherever the hell it goes next. Um, so probably could have implemented this better, but it was at least in keeping with the original plan that I made. And it's fine if your underlying thesis hasn't changed. It's fine to keep plowing away at that plan. But if there's ever a point where you're like, oh, the thesis has changed, then it's perfectly fine to abandon whatever that original plan was or modify it. However, for the last 9 months, basically all of 2025, it has seemed like revenge betting, right? You go to the casino with your last $100 and you keep losing, and then you just keep double or nothing to try to win your money back. It's kind of what this has felt like. So You got to take a little bit of a step back and reflect on if you're doing things out of emotional investment, or whether you're still within your original plan. So if the market gods hate me, they will probably let me just let all of my out of the money options expire by the end of the year. I'll move out of leverage, and then we'll get like a killer pump in February, some shit like that. Um, so please don't do that, market gods. Have pity on me. Um, yeah, so I'm fine with this. If I piss away a bunch more covered call premium through the end of the year, I guess that was just kind of always in the cards. But if you can develop a little bit better sense of the market and timing, or if I had been able to, I would have been able to take more profits in November, then have dry powder to enter into some of these um, cheaper positions, entry positions in the, I don't know, spring and through the, actually, this didn't even, so it's funny because I say sell in May and go away, but strategy pumped in April and kind of did well through July. So sell in May and go away really didn't work. I mean, I guess if you sold in November, accumulated in February, then you could have, yeah, no, actually sell in May would have worked. If you accumulated here, yeah, you totally could have sold in May at this 400 pump. But that doesn't really seem like a win, especially if your cost basis is 400 over here. Selling in May is like kind of admitting defeat. You didn't make anything here. But it's probably makes sense that it would have been the way to go, because the market doesn't owe you a profit. Like if you bought here instead of here, that was your first mistake potentially. So maybe taking half of that off the table in May would have made sense. But at the same time, since I since since all the money that I did lose and pissed away was all generated with the covered calls that I sold in the first place, this is kind of like not to the end of the world, but definitely room for improvement. So, new traders should absolutely keep a journal. These videos are kind of like a journal for me. I'm literally recording all of my positions and talking about it. But people can keep keep their trades to themselves, but keep it in a little journal, Excel spreadsheet, Word document, whatever. But you should probably be recording all of the trades that you make, what you were thinking when you made them, and what your plan is to do with them, especially if they're options. What you're going to do if the price goes up, what you're going to do if the price goes down, what you're going to do if the price stays the same, and what what the conditions are that will change your mind. So could have done a lot better, but none of this was truly emotional. This was kind of all in the plan. It's just that the plan should have probably included for much more volatility and much more aggressive profit taking with leverage. So I started trading in May of 2020, way back here. And all of this was done as a primarily as an option seller. It wasn't really until March 2024 ish, whenever Quant Bros 1 came out, that I really fell in love with long calls, because I saw, what strategy could do. And that ended up working out very well. It's just that I didn't realize that that the corollary to the irresponsibly long philosophy should be a responsibly a responsible profit taking position, right? If you're going to be that irresponsible with your long positions, you should be absolutely cutthroat taking profits, because you can't stay irresponsibly long forever or you get wrecked. So temporarily irresponsibly long is probably fine, but permanently irresponsibly long is a recipe for disaster. All right, enough about that. Only 2 hours left to close. So let's check chats and then get busy. Will you be stashing your profits in Stretch? If my assumption is that the 4-year cycles will continue, and at some point, Bitcoin will run to 150 or 2 and then get cut 50% over the bear market, I think that would be one way to do it. But I will probably move most of my extra positions into Tesla. I still have like one token Tesla position in my IRA, but regardless of whether strategy pumps or closes the year out at 306.18, I will probably at least rebalance this portfolio between strategy and Tesla. And the reason why I'm so bullish on Tesla and have been for years is for the same reasons that I'm bullish on strategy over the long term. I can't remember which interview it was, and I think he only said it once, but Saylor said that he might have been talking about his book, The Mobile Wave, but he said that you invest in an asset when it is number one, disrupting, and number two, the clear winner. And the examples that he gave was Netflix when it's about to disrupt Blockbuster, Apple when it's about to disrupt Nokia and BlackBerry. What was the other one? Yeah, Facebook when it's about to disrupt. What was the other one? MySpace. And so strategy is disrupting really the entire financial system. Assuming they get in the S&P 500, I'm assuming that they will dominate. They are going to eat the bond market. Well, they're gonna help. They're gonna help Bitcoin eat the bond market. So MSTR is a disruptive force. Are they the clear winner? I think they are the clear winner. They've got more Bitcoin than anybody. Their lead is practically insurmountable, and anyone that can catch up is probably stuck on stupid and won't do it. And even if they did, they would have to do it in such a way that they secretly stacked sats and didn't let the market know they were doing it. But I don't know how they would buy that much Bitcoin without the market sniffing that out. And so if I apply those two criteria to Tesla, they are disrupting. They've already disrupted the gas car manufacturers. They're all going to go out of business in some order. GM is probably the worst run U.S. auto manufacturer, so they'll probably go bankrupt first. Maybe they get a bailout. Doesn't really matter. Delays the inevitable. Toyota is going out of business. They'll probably be subsidized by the Japanese government. Hopefully Metaplanet is so big by then and have inspired enough Bitcoin treasury companies that that all of the Japanese economy doesn't just crash from Toyota getting fucked. VW is an absolute train wreck of bureaucracy being affiliated, I think, and actually sponsored by the German government. So they're screwed. There's the guy, Stephen Mark Ryan, that I follow on YouTube, and his prediction is that it'll be Tesla and like 9 Chinese electric vehicle companies in 10 years. that will dominate the world vehicle sales. Maybe Ford survives the longest because they seem to have the best leadership. Um, he still has moments every once in a while when he kind of, I don't know, thinks he can compete still somehow. But I've talked way too long about cars because that's not even the tip of the iceberg as far as where their profits are going to be coming from. So, over the next 5 years, their robotaxis are going to ramp up insanely, which is another reason why gas car companies are doomed because you're going to need less cars on the road when there's millions of freaking driverless robots driving people around. So people are going to be buying more electric vehicles and less gas cars, and then there's just going to be people buying less cars in general. So the market share that gas car companies have enjoyed is going to dwindle, which makes the only way that they can even produce cars at a reasonable price is by producing millions of them. And when those numbers drop, the cost of each vehicle is going to go up. And when the cost of your vehicle goes up, the sales goes down even faster. And it's just going to be a downward spiral. But um, Tesla's robotaxi profits will make their EV car sales look irrelevant. And then I would assume their price will moon. And then they will start ramping up Optimus robots, and then their price will go into the toilet again because they're just going to plow all their profits into Optimus. But then once they ramp up with Optimus, it'll make their robotaxi profits look insignificant. So I've I'm pretty much decided that I probably won't need much more than strategy in Tesla for the next 20 years. And as far as my portfolio goes, obviously Bitcoin is the sovereign asset, but I'm uh, I'm pretty confident that strategy will outperform Bitcoin over the next 10, 20 years. Maybe when Bitcoin's CAGR is closer to 20 or 30, and strategy still paying 10% on their preferreds, maybe this will become a less lucrative trade. And there will be points in time where Tesla is ramping up on things and they'll have disappointing earnings. But I also think that Tesla has the potential to outperform Bitcoin over 20 years. So that's my thing. I also do trade, and this is my 5K account challenge that I started in March 2020. And so I still, I mess around with the miners, and I've got a little token Strive position, um, just kind of moral support for when Jeff took a position there, and Ben, I believe, was on the board as well. So I was like, I want to participate. I mean, this is like a super small position, but and got one more here. Um, but so I'm, for people who have a smaller account that can't trade strategy in size, can't trade Tesla in size, I do kind of show how the strategies work with some of the cheaper stocks. But none of these are companies that I have researched and like, okay, I'm totally all in on this thing. Just with the talent that Strive has, like that's hard to bet against. But I mean, strategy is the clear leader in the space, right? They're the big dogs. So yeah, that's the plan. Temporarily, maybe I would do something like that. Like if we do get another blow off top, Um, and for example, like if strategy and Tesla, for some odd reason, the gods hate me and they both pumped at the same time, and I would be tempted to take profits in strategy, but also not really wanting to buy that much Tesla at the top. Um, assuming that they both went to like 750 or 1,000 in the same time frame, and I wasn't able to really use them as a pairs trade. In that sense, maybe I would go like 1/3 Tesla, 1/3 strategy, 1/3 stretch. So I'm keeping it, definitely keeping it as an option. And and Ben even said, he said before that sometimes, like when you make these long term bets and you win, and you're just like, holy shit, my portfolio's up double, triple, quintuple, whatever. It's very hard to make a good decision, and sometimes it's okay to just fucking go to cash. I know as Bitcoiners, cash is a dirty word because it's like, um, it's a melting ice cube, but I mean, it's not going to melt in a couple of months, right? And so in November, if I had went to cash, this 5K account went to like 35. And if I had just gone to cash here, dusted myself off, taken a few deep breaths, I might have been able to get more favorable entry positions during the next 6 months. But I just kind of plowed ahead and didn't really, uh, I didn't take profits as with enough discipline here. So turning 5K into 35 was pretty cool, but turning 35 into 8 didn't feel very good. Um, this strategy does work, I think, in the long term, but you can also be a little bit smarter with it. You don't just have to stick to the damn thing 24/7. But then at the same time, um, strategy could have gone to 1,000, and maybe I would have missed out on a bunch of profits here. Who knows? So I try not to make price predictions and just let small wins aggregated, weekly and monthly over time kind of add up. What's up, Emperor? Just saying what's up. Work and such has kept me from turning in. Yeah, good to see you here. What's up, Buffalo? What's up, James? Or rotate some to Tesla and run the wheel. Yeah, so I think you must have posted that right before I started talking about it. Exactly. Yeah, that's kind of my hope. If the market gods really do want to bless me, they'll let me pairs trade Tesla, and like Bitcoin will run to whatever 175 by the end of the year. I can unload all of my strategy leverage. I'll keep a bunch of shares through a potential bear market. I don't mind doing that. But absolutely, I don't want to carry leverage into 2026. Maybe too much beyond January. But yeah, what I would really like to see happen is strategy run. Tesla can just pump the brakes until that strategy run happens, and then maybe we get like some insane Q1 2026 Tesla earnings calls where they're like, holy shit, we're already starting to be profitable on Cybercab or something. Something along those lines would be pretty cool. Hey, what's up? What's up, Tyler? 2027, 2017, I'm mad I took profits. 2025, mad I don't take profits. Yeah, that's the hard part. Strive should crush. The trick is getting the right entry price. Yeah, I think the pipe's gonna unlock soon, so I'm kind of um it's kind of crazy like how much premiums you can get here, even though it didn't work out, right? I collected 35 cents, which if I get assigned, which I'm definitely gonna get assigned today, or sorry, next week. Um, Not definitely then, I guess. Sorry, kind of definitely. My cost basis would be 265, but that's still a loss because ASST, as volatile as it is, it can just ping pong around. It's so cheap. I mean, if somebody wanted, if hedge fund wanted to manipulate the price, they could probably just make it go wherever they wanted. Um, but yeah, if the pipe unlocks are around a dollar something, maybe they'll just dump. Maybe they're already starting to dump. Like they technically can't, but maybe I don't know. I don't know if they have to sign an agreement saying they're not allowed to short it. But when Strive was 9, if your cost basis was a buck 50, I would be wanting to take profits. What is that, a 6x? So this up and down is really not unexpected. A lot of times when these things pump, they often correct to at least 50%. So this went from almost nothing to 13, so losing half of that value, easy peasy. Really, they've lost 3/4 of that pump. But I mean, if you owned it at 60, you're still up 400%, 300% maybe, 4x. What's up, CT? My portfolio was up 5x overall in November, and I was thinking to myself, I should just sell everything and be happy. I guess if I ever get that chance again, I'm going to listen to that gut instinct. Yeah, that's when I retired, and I think my account's down 60% from November. I'm still fine. I'm not gonna have to start eating cat food or anything, but um, it is rough. See, was looking at Strive Leaps, but they are more expensive than the shares. No shit. Even the calls. I've been selling, taking a little dip in my toe and selling the puts, but like Leaps. Holy shit, yeah. So that's kind of wild. So yeah, to buy some $3 calls for January costs more than the shares themselves. The bid ask spread is just wide as fuck. And that's another reason why I've only taken kind of like a token position here, is the liquidity on the options is still not good. These kind of bid ask spreads are a red flag. Like even if they execute perfectly, this goes to $10 a share, whatever, 15 a share, and you're like, okay, cool, now I want to cash out on these $3 calls. If the bid ask spread is freaking $4 wide, it might look like you're going to 10x your money, but then just to get a fill, it might only be, I don't know, 5x or something, which is still a win, but it's it's a little bit of a pain in the ass. There you go. YOLO Doge. What if I what if I don't have gut instincts? Yeah, that's what the plan is for. You just develop the plan, and then when your gut is roiling and you don't know what to do, you just go back and look at whatever your plan was, and then you just execute it. Alrighty then. Let's let's speed run through this shit. All right, the IRA. Tesla's running again a little bit, so that's cool. I will probably hold on to these last 100 shares no matter what. Kind of doesn't really matter since I'm in an IRA. I can trade in and out of whatever the hell I want with no penalties. But since I know that I want to rebalance in Tesla, just holding one position at least kind of keeps one eyeball on it. Yeah, this is still, I only have only had this on for one day, so really this is just going to be a lot of me doing nothing. you know, none of these positions are going to be ready to roll. And I don't have any buying power. Oh, sorry. Yeah, $200 in the IRA. Nothing to spend there. All right, the main account. I can't remember exactly what I said, but yesterday I sold 100 shares and bought in some more leverage. I took like 3 more of these 250s on board. And so now I have a total of 9 poor man's covered calls. I almost have as many poor man's covered calls as fucking regular covered calls at this point. But the last remaining 200 shares, I kind of want to hold on to unless we go below 300, which I think is absolutely possible. If we get sub 300s, I'll peel off another 100 shares and add more poor man's covered calls. And then if we see like mid 200s, 250 to 275 ish, I'll peel off the last 100. But I do want to keep a core position of shares that has no expiration date. And if the bull market is over and Bitcoin closes out at 110 at the end of the year and Strategy's just hanging around 300, I will cry myself to sleep, but at least I'll still have a core share position that doesn't expire, and I'll just lick my wounds and keep it moving. All right, this is my spending account where I basically just put my allowance. Not ready to roll. No cash. Next. This was formerly the challenge account. I probably need to shuffle some money around. Okay. I was pretty aggressive selling, you know, I just kept rolling my covered calls down and down and down, and I was half expecting them to just get wrecked again, but they didn't. So let me turn the volume down. I don't even think I'm sharing volume, but just in case. So time to close these bad boys and just keep the profits. Unfortunately, I only put 3 back on. So now I have to decide if I want to put how many I want to of these 4 that I want to put on for next week. If I sell at the expected move, I can get over 1% return on capital, right? The shares are worth 30,000 and I can collect $300. So that's 1% guaranteed profit for 1 week. Even if strategy does stay at 300 for the next 365 days, that would be 52% returns. And there's about not quite 10%, let's call it 7% call away value, even on these aggressive weeklies, which kind of makes me laugh why, you know, people pay attention to the IV rank. It's like, oh, it's in the toilet. It makes me premiums are bad. Like, if I didn't care about the strategy going up, I could literally get 3% return on capital selling at the money, which would be 150% returns. Now, if strategy does rip to 1,000, I would get 0% of that call away value, and the only thing that would be left with would be the 3% for this week. But if I wanted to be reckless to the downside, you know, I could do that. And these 3% for 1 week is pretty stellar premiums to be collecting. If you compare these to like Apple, you might be able to get 0.5% at the money, maybe 0.75% or something. So the premiums are lucrative. It's just I'm not willing to throw in the towel on upside completely yet. So I think I will just go ahead and sell At the expected move. 4 of them. I think the last time I did this, I did get wrecked. We moved to like, I don't know, 500 bucks over my strikes. But that will give me. Wait, why do I have so much cash? Did I forget to reinvest something? I probably need to make a withdrawal to pay some bills anyway. So maybe I will only reinvest a little bit of that. What did I just collect? 1200. So I'm going to revenge bet a little bit and I'm going to buy 3 more of the marches. This is like my last ditch attempt to win a lottery ticket. If I'm kind of guessing the bull market will be over around the end of the year, these marches will have 90 days left on them, and that'll, I'm not going to let them get any closer to expiration than that. So these marches are probably the last long YOLO attack the tail that I will be attempting. And if none of them win, I think September's had some profit, but not really enough to make a huge difference. So I'm just going to pick up 3 more of these. And I'll keep the rest of that in cash to make a withdrawal. Make my mortgage company happy. All right, cool. What's up, dude face? As long as Sailor remains based, I'm good. Premium I'll take. Been adding less, though, and building out my Tesla position more. Outstanding. Yeah, I am I am I am holding out hope that Bitcoin gives us one more last gasp. I mean, it would be totally cool if there's a super cycle. Some people are still calling for 4-year cycles demise, but I don't know. There's always a black swan around the corner. All right, so this wolf put expires today. This could end up expiring out of the money, and then I'll just be assigned shares. But I think I'll just go ahead and roll this now. I'll pay the 12 cents, and I'll just roll it for like 40 bucks to next week. Point 2.19. Let's try that. There we go. All right, don't have anything else expiring today. I already have the Strive put rolled out to next week. Oh, the IBET call. So let me just double check. I've got the long 55 that's worth 15 bucks. So selling a poor man's covered call against this, if I add the 2, gets me to approximately 70. So let's see. Yeah, so this is ready to roll. Sold it for $1.13. It's only worth 50. So I'm gonna roll this, unless I mean how many days I've had it open. Yeah, 17 days. It's pretty right on time. So I'll roll this to 42 days to expiration. And I'm gonna just roll from the 70 to the 70. And I like the price. Like, this jives also, right? I sold it for 113. I'm buying it back for less than half. And then I'm rolling it out to a strike where I'm collecting double what I'm buying this back for. So I like this strike very much. Let's do 0.5. Okay. That put 50 bucks buying power in my pocket. The 375, I rolled this yesterday. So yeah, this doesn't need to go anywhere. Hmm. Oh, you know what? I can deal with this riot position. So my friends that I was copy trading, I texted them the other day. I was like, hey, um, we can kind of like cut our losses here, and actually could have taken a teeny tiny smidge of a profit here. But I was like, hey, we can just cut bait on Riot, and only take $100 loss here. And they're like, oh, my bad, we exited those positions, which is totally fine. I mean, it's not big money we're talking about, but hopefully they did learn from this. I mean, we bought these at the worst possible time, right after the euphoria in December. And then it was just a train wreck ever since. Like, there was no point where we could have taken profits, like maybe right here in January, break even. So we just held through this entire catastrophe of a summer and kind of like almost got back to even Stevens. But the other thing that I can just cut my losses here, or I'm just going to view all options and I'm going to see if I can sell. I have the 22. If I sell at the 22 or higher, that should offset my position just fine. This thing is worth $2. So if I want to turn this into a weird super short-term poor man's covered call, I should add the $2 to the strike, which gets me to the 24 strike. So I can actually start chipping away at my cost basis here. And maybe we can just see what this would look like if I was opening this trade from scratch, right? I have the 22 strike. For January, right? Yeah. I've got the January 22 strike. If I was buying this today, it would cost me $2. Now, in general, when you're doing a poor man's cover call, you're going to buy an in the money one, right? You're not going to buy the 22 strike that has a 40 delta, but beggars can't be choosers, and this is what I already own. And so here's the graph. And I know people clown on Robinhood, but they've actually, like, the tools aren't bad, right? I mean, it's free trading, for fuck's sake. So if I go out to 42 days to expirations, flip to the sell call. In general, with a poor man's covered call, you want to add the strike to the price, and that'll get you in a relatively safe zone. So if I go to the 24 or higher and add this, now it changes this graph here. And the only way that I can lose money on this graph is if the price goes down. If the price goes up to my strike that I just picked, 24, that's the max profit. And then if the price of Riot continues to go higher, then I start to win less and less money. If this went forever, like, maybe it would turn red, but it would be like, this slope is so gradual, it would take like, I don't know. Riot would probably have to go to $75 a share to turn this into a losing trade. So I'm fairly confident in making this trade. But if you wanted to make it safer, you could just keep picking higher and higher strikes, and you'll see that the slope gets less pronounced. So I can just exit the trade, take my losses, take my lumps. Bought it for 300. I can sell it for 2, or I can go out here, sell a call against it. Now I'm reducing my cost basis from 310 to 250, and yes, that caps my max profit at 24 if Riot really runs. But I'm kind of turning this into some kind of bastardized poor man's covered call. So that's what I'm gonna do. But this graph doesn't take into account that I own the 22 strikes. So this is the way I'm going to play it. Your options are basically, exit for a loss, sell a call against it, or, just hodl to expiration. And, if Riot did go to 50 a share, then I'd win, it'd be a nice little scratch off lottery ticket play. But I think this works just fine. It basically reduces my max loss from $300 to $250. And with an option seller's strategy, that's basically the name of the game, is just reduce your cost basis as much as humanly possible. It decreases your upside, but it increases your chance of success. So that's kind of the point. Again, win or lose, I will exit all of my leverage positions in no later than January 2026. Same for these, and same for this IBIT call. All right, only have $350 worth of buying power, but I could dollar cost average into these debit spreads, I suppose. But yeah, I think I'll just keep a little few dollars in cash. See, I'm liking the $2 calls on Strive. Call it a bet on Jeff. I'd say the risk is worth it. I'm taking long 800 days though. Oh, talking long 800 days. They're so cheap. The $2 calls. Oh, so in the money. Interesting. I wonder if this is ignoring. Yeah, this is so far in the future, it's probably ignoring the pipe and all of that crap. But this is, I mean, the only reason well, 2028 puts you, well, January 2028. So that's like the beginning, like, if 4-year cycles continue, that kind of like means you're hodling through the entire bear market just for this to expire right before the bull starts. So that scares me a little bit. I'm probably gonna wait for the pipe unlock. I think that's supposed to be happening soon, maybe by October. What did Grok tell me? October 16th. Let me check the expiration dates. It's one day before the October. Yeah, I think it's like October 16th or something. So if the pipe investors tank the price to sub 2, maybe I'll use that as my entry position. But yeah, for now I just have a little token position. Actually, I did sell 20 puts in my wife's account. If they fuck it up, then it's just her retirement, not mine. Any thoughts on Catalyst to get strategy moving back up, ideally within approximately 10% of all-time highs end of year? Yeah, someone's got a cost basis out there, don't they? Yeah. I think we voted on it. Well, not really voted, but we discussed the likelihood of getting into S&P 500 on Wednesday on the True North call. And some were thinking maybe the third attempt, which would not get us in Q3, but maybe Q4. But that doesn't get you, that probably wouldn't get you a front running before the end of the year. If they get in Q3, absolutely, we could see front running through the end of the year, up until maybe once they get in. But without Without that, the only thing that I could see is if they announce another preferred and it gets upsized to like 1.5, 2 billion, they could add a bunch of Bitcoin. But otherwise, their ATM is kind of like a slower drip. And I don't think the market's like, the market should be a little bit more excited about it than it is, but it's just not. And I think there's, the sentiment around some of the quote unquote faster horses maybe diverted some of the cash flows out of strategy, and they really haven't come back because now those stocks are getting hit themselves. So maybe people didn't take profit in those faster horses when they could have or should have, and they would have had money to pour back into strategy. So they're probably too busy dollar cost averaging into their positions that they're bleeding in right now. They took profits in strategy, bought something else, and if they're upside down in those positions, they're probably trying to just frantically dollar cost average into those positions so that they can turn it into a profitable position. But yeah, I mean, if for some reason the preferreds just really, the liquidity on those really started ramping up and they were just hammering the ATM on the preferreds and their leverage was growing, that would be a potential catalyst. But I don't see that happening before the end of the year. So the only thing that I think could add a ton more Bitcoin to their balance sheet, other than the slow drip of the ATM, would be, one or more preferreds being announced where they were able to just smash by a couple billion worth of Bitcoin. That might do it. What else? S&P 500, preferred ramps. I was trying to think of this exact question recently. What else could happen? I mean, obviously Bitcoin, but we're trying to think of other than Bitcoin things. Yeah, I don't know. Those are the only two that I can really think of off the top of my head. Let's see. Just got one to watch for now. It's interesting. Talking about Strive. Let's say strategy enters S&P as you speculate. Does this soften the 4-year cycle? Do we only retrace to 80K range in Bitcoin if all your models are broken? Which models remain? Just my thought. Yeah. While it's possible, I always just kind of feel like the market is still a representation of human psychology, and we always FOMO. There's always going to be someone when Bitcoin is ripping to 200, they're going to 50x leverage at the top, thinking it's going to a million. And all of those shorts are going to start unwinding. And then more and more are going to start to unwind. And more stop losses are going to get fucking hammered. And it will either just be a normal part of the cycle, or it could be some kind of black swan that we are not looking at, right? So we know strategy can hodl through winter, but we don't know that about any of the other companies. And any of these companies that have encumbered Bitcoin or just over leverage in general just might not make it. And if they start getting wrecked, and then there's a bunch of consolidation in the space, and the big companies are just acquiring all the little companies that are going belly up, all of that shit could start to unravel. I kind of have this weird suspicion about Tether. They seem, I mean, it's definitely paper Bitcoin, and it's a stable coin, which means it's just, who said it the other day? They called it a guaranteed loss coin because if it's stable to the US dollar and the dollar is a guaranteed loss, then Tether is a guaranteed loss. So there's just something fishy about them that makes me wonder if they could be the cause of the next black swan event. if we found out somehow that, I don't know, they didn't have enough Bitcoin to cover everything, or who knows. But yeah, there's always something that we are not thinking about that will come up either and cut our bull market short, or will happen in the middle of the bear to make the bear worse. And I think that I think that's just human nature, is that we fall for the okey doke, we FOMO into euphoria, and enough people will get wrecked that it just takes a year and a half for the market to figure that shit out. Oh, so actually, now I did just think of another catalyst. If they have to just print more than we ever thought they were going to print, like everybody knows they're going to print, but if they print so hard that inflation spikes so bad that everyone just dumps all of that speculative money into Bitcoin, maybe that's what causes the super cycle. The other thing that you probably shouldn't underestimate is the ego of a US president. And if Trump wants to ride off into the sunset as a, you know, being thought of as a great president, he probably needs the stock market to just run like a motherfucker for the next 2 years straight. And if rates come down, if they come down too fast, it could spook the market, but then maybe they'll just lower them, lower the rates even further and just jumpstart it completely. So that could totally happen, is that well, I guess they still have time, right? They could tank the market in 2027. That would coincide with the Bitcoin bear market. And then if they turn around and pump the shit out of everything, and the stock market and Bitcoin runs early into 2028 for the next election, um, for Trump's farewell victory, that would still put a feather in his cap, I suppose. I did hear one person said that they that they think he'll run as vice president, and basically everybody will know that he's still running everything. That would be kind of funny, but that would be a sneaky way to get a pseudo third term. Really stick it to the peeps that stole the election from him last time. And there's ways they could manipulate public sentiment amount around that too. Start a nice war in 2027. That usually drums up the votes. So hopefully Bitcoin will fix this shit before then. Did you see the Vanguard Bitcoin news? Another catalyst for us. They are working on Bitcoin products. Yeah, and that was just in time to piss me off, because I had my retirement from my job that I quit in December was stuck in Vanguard, and I was so pissed off that there was nothing I could do by directing that account. I tried to get it rolled over into another exchange, but it just wasn't working. And I finally got fed up, and I told him, just send me my fucking money. I'll pay the tax penalty. So I paid taxes on it, and then I paid an extra 10% on it on top of that. And if I had kept that Vanguard account now, I'd just be able to slam it into something Bitcoin. So it happened just in time not to help me. Dreamin', in my opinion, Treasury meta is shifting from size discount to premium, from small companies delivering high Bitcoin yield percents, from low bases to everyone trying to grow to pref insurance issuance, as ATM spamming proves unendurable, or is undurable a word? For that reason, I'm bullish on the flight to quality, with strategy being able to sustain higher persistent MNAV than the small BTC TCs. Yeah, I think that's probably right. I'd be interested to see which Bitcoin treasury companies forge their own paths following every step strategy makes is just that, behind strategy. I think M&A is interesting and new. It's also more familiar to TradFi. Yeah, that was wild. Like in a very short time after their what was it, reverse IPO, whatever the hell they did. They merged with ASST, and then they just bought another company. It's like that's making shit happen pretty quickly. People have been fudding Tether. What the Okay. Well, I just got black screen. I don't know if I'm still live, but I'm gonna have to figure it out. And we're calling this one a day, I guess. My laptop's still on. I guess I might be back. That was wild. Was I even talking the whole time? Huh. I've been having some computer problems, which is annoying because it's a new fucking computer. Um, let's see. 6 months from now, what new products will Strategy have? That's what I'll be interested to see. Imagine a Vanguard preferred shared Bitcoin Treasury Company ETF and mutual fund. That's something I would expect them to do. Thanks for confirming. Yeah, that's wild. I don't know if he's just riding off into the sunset or if he's done. Yeah, so I fucking got black screens, but my laptop was still on. I've been dealing with some security issues. Someone who got hacked contacted me and tried to get me hacked. Um, not that not the person who got hacked was trying, but the people who hacked somebody that I know. And so I've got like malware bytes installed now, where I was just using some other products. So I wonder if that's caused me to freeze up now. But I'm super paranoid about cybersecurity over the last week. All right, let's just call it a day before something else bad happens. All right, be good, y'all.